Gold can go to 10,000, go to gold 20,000. Doesn't matter to Powell. How can it not matter? You know, I pointed this out on this podcast, but when Alan Greenspan was Fed chair, same job as Powell, he said gold was the most important indicator that he looks at. He said that we're not on a gold standard, but we're on the next best thing because he uses gold to guide his decisions. He said gold is how he knows if he's got the right monetary policy, if he's too loose or too tight. He said if gold is getting above 400, I know we're too easy and we need higher rates.
Gold's price movements continue to spark debate over Federal Reserve policy. Critics argue that Jerome Powell downplays gold, even if it surged to $10,000 or collapsed to $25, claiming it doesn't matter. That stance contrasts sharply with former Fed Chair Alan Greenspan, who openly said gold was his most important monetary indicator. Greenspan believed gold signaled whether policy was too loose or too tight, guiding interest rate decisions. Economist Peter Schiff frequently highlights this contrast, warning that ignoring gold blinds policymakers to inflation risks. As markets question fiat stability, gold remains a signal investors and banks can't afford to dismiss. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Gold and silver have been surging recently, and the reporter said, are you watching this, paying attention? Is there any message that is being sent by the precious metals market that maybe you should, pay attention to? And Powell basically said, no, absolutely not. We don't care. We don't pay attention to it. We don't think it has any relevance. So we don't care what happens to the price of gold. Now, gold is a monetary metal. It is the most important monetary metal in the world. He said that he is in charge of monetary policy. Well, isn't a monetary metal relevant to monetary policy? How could it not be? Yet, according to Powell, he doesn't care. It means nothing. Gold can go to 10,000, go to gold 20,000. Doesn't matter to Powell. How can it not matter? I pointed this out on this podcast, but when Alan Greenspan was Fed chair, same job as Powell, he said gold was the most important indicator that he looks at. He said that we're not on a gold standard, but we're on the next best thing because he uses gold to guide his decisions. He said gold is how he knows if he's got the right monetary policy, if he's too loose or too tight. He said, if gold is getting above 400, I know we're too easy and we need higher rates. He said, if gold falls below 300, then I'm too tight. We need lower rates. Now, it shows you, gold is 5,500 now, right? It's 10 times higher, more than 10 times higher. What does that tell you? Monetary policy has been too loose for too long. But the point I'm making here is that a prior Fed chairman said gold was his most important economic indicator as to the efficacy of Fed policy, a check on whether or not he was doing his job right? It was the free market, check on the central banker. Did you get interest rates right or wrong? Because the central banks are just picking interest rates, right? It's not the market. What feedback do you have? How do you know if you're the Fed, and you set interest rates, how do you know that you got it right? Well, what Greenspan said is we know because I look at gold. Gold is the free market's way of telling me whether I got it right or wrong. Now, here you have Jerome Powell in the exact same job that Greenspan had, and he says he couldn't give a shit. He doesn't care. He doesn't look at gold at all. Now, one of these guys is wrong, right? Powell says gold is irrelevant. Greenspan said it was the most important, signal he had. Who's right, right? Because they were both Fed chairmen. They're both supposed to be so great, right? They're supposed to be, the gods of the economy, right? They're all knowing and all powerful Fed chairmen, yet they have diametrically opposed positions on the exact same thing. Now, I side with Greenspan, right? Greenspan had it right. Gold is important. Powell just doesn't understand how important it is. Gold soaring is saying, Powell, you got it wrong. You better hike rates ASAP. Rates are much too low. In fact, the whole time gold's been going up from 2,000 to 3,000 to 4,000 to 5,000. Gold's been screaming, you're too easy. You're too loose. You got to tighten up. Yet what did the Fed do? They loosened into gold's warning that they were already too loose. By the way, you'll notice I did the Tucker Carlson interview less than a month ago. The price of gold was $4,000. It's $5,500 by now. That's how fast it's moving up, right? This is a big, big deal. This is just not a little move. But Powell could not care less about it, right? It's like, you're a fireman and someone tells you, hey, there's this, the house is, there's a big fire, and, you're just, I don't care. No big deal. Let it burn. I mean, how much clearer could the warning be? The dollar is going to collapse. Gold is telling you. Now, Powell, did say in the same response where gold means nothing, right? He said some people might argue that gold going up represents some kind of loss of confidence. Yeah, some people, the smart people, right? There's a lot of people that know this, right? So he said some people might jump to the wrong conclusion that there's some loss of confidence, but he said that's not true. And he said the reason I know it's not true is because I'm looking at the bond market, and the bond market is well behaved. And if there really was a loss of confidence, bond prices would be falling. Yes, they will be falling, but the loss of confidence is being expressed first in gold and now silver, because those are the most sensitive. Just like with the financial crisis, subprime blew up before the rest of the mortgage market because it was the most sensitive. And that's why when the Fed said, don't worry about subprime, it's contained, right? It wasn't contained. I knew it wasn't contained. I knew it was going to spread to the rest of the mortgage market. So what Powell is basically saying is gold and silver are contained. Don't worry about it. It's not a loss of confidence. It's contained to gold and silver. No, it's not contained. Gold and silver are just moving first. That's your warning sign. You're going to see a crash in the bond market. But of course, by the time the bond market crashes, well, it's just too late to do anything about it. Oh, it's already happened. Stop the horses, close the barn doors when the horses are long gone. But that's what Powell wants to do. He wants to wait till every horse is gone to say, okay, we better shut those doors. What good is that going to do you? And meanwhile, there already is some evidence that the bond market is not right because yields are about 4.25 in the 10-year. They were 4 before the last rate cut. In fact, the Fed has cut rates now, I think, 6 times, and treasuries are quite a bit higher, over 100 basis points higher than they were before the first cut. So the Fed was not able to lower long-term rates. That's already a sign that confidence is being lost. But you can't wait until it's completely lost and there's a bond market crash to think, oh, maybe I should do something because it's too late. And the same thing with the dollar.
Gold and silver prices are surging, sending a clear warning about U.S. monetary policy. Federal Reserve Chair Jerome Powell dismisses precious metals as irrelevant, but former Fed Chair Alan Greenspan believed gold was the most important indicator of policy success. Economist Peter Schiff sides with Greenspan, arguing that gold's rise from $2,000 to over $5,000 reflects years of overly loose monetary policy. Schiff warns that gold and silver are early signals of declining confidence, preceding stress in bonds, the dollar, and broader financial markets if ignored. Let's get back to the interview.
Is up another $70 this evening after being up $235 during the day. $235. Gold closed earlier today at $54.14. But an hour ago, gold was up more than another $150. We almost got to $56. Gold was up $400 within a single day. Now, I mean, it's not midnight yet, so who knows? Maybe it'll make new highs and it'll be up even more. Silver made a new all-time record high an hour ago. Silver got above 119. It almost hit 120, but it got above $119 an ounce. It's now trading at just over 117, which was the record high we set on Monday. And because we sold off, everybody thought, oh, the top is in. Silver was up a couple of bucks today. Most silver stocks were down today. That's how insane it is, right? Gold stocks were barely up. Some, hit new highs, but it wasn't a big day. If you just looked at gold stocks, you would have no idea that gold was up $235, right? You'd think, oh, what's it up, $50, $40? No, right? Investors are clueless. The financial commentators are clueless. The Fed is clueless about what is going on right now with gold and silver and what it portends. That is why you listen to the Peter Schiff Show, because I understand what this means, because I was predicting this. I knew this was going to happen. I could see it coming from a mile away. The mainstream media, which had no idea that this was going to happen to the price of gold, they don't understand why it's going up because they didn't expect it. If I've been predicting this for years and now it's happening, okay, I know why it's happening because I expected it to happen. I actually expected it to happen sooner, but the mainstream financial media didn't expect it to happen at all because they don't know what they're talking about. Right? They are clueless, as is the Federal Reserve, right? It's the blind leading the blind over there at the Federal Reserve. But before I get to the FOMC decision announced today and the press conference, which I don't know if this is, they keep topping each other in absurdity, but I don't know if this one contained the most, blatantly absurd comments from Powell. But maybe it did. But before I get to that, let me just kind of go back to yesterday, because yesterday was a big day. Yesterday was the biggest day for gold until today, dollar-wise. Gold was up like $135 yesterday, which I guess is nothing compared to today. But gold made a record high yesterday. But what also happened yesterday?
Gold and silver prices are exploding, signaling deep stress in global monetary policy. Gold surged more than $400 in a single day, smashing past $5,500, while silver hit a new all-time high above $119 an ounce. Yet gold and silver stocks barely moved, showing how disconnected and unprepared investors remain. Economist Peter Schiff argues this confusion proves the Fed and mainstream financial media are clueless about what precious metals are signaling. Schiff has long warned this surge was inevitable, driven by reckless monetary policy. According to Schiff, gold and silver are flashing urgent warnings of inflation, dollar weakness, and looming financial instability. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.